Good day, everyone. You are welcome to this week's Business and Investment Tips program, a production of RCCG Christ Church Radio with Ayodeji Ebo, an investment professional. This week, the focus is on the surge in commercial paper issuances, understanding the fundamentals. We have observed significant issuances of commercial paper in the past few weeks. Hence, we thought to shed more light on this investment opportunity to enable you to understand or remind you how commercial paper works. The current total outstanding of CPs in Nigeria as of Friday, 3rd November 2023 is 813.3 billion naira, according to the FMDQ exchange. The average tenor and issue yield stood at 94 days and 16.2% respectively. At least one issuer rating is required before a company's CP can be admitted to the FMDQ. On the other hand, due to the high inflation rate, which was 26.7% year-on-year as of September 2023, investors have sought investment opportunities with higher returns above the risk-free government treasury bills. Investors do this to bring their returns closer to the inflation rate to protect the value of their investments. Commercial paper, also known as CP, is an unsecured short-term debt instrument issued by large corporations to raise funds to meet short-term financial obligations. CPs have several similar characteristics to treasury bills. However, one of the main differences is that treasury bills are issued by the government while CPs are issued by corporations or companies. Characteristics of commercial paper. CPs has a fixed interest rate and fixed tenor. CPs are issued at a higher interest rate than treasury bills because they are riskier. It is not backed by the full faith of the federal government. This presents an opportunity for investors to earn a higher return. CPs are issued at a discount to its face value, implying that you pay less than the maturity value. This means that if you invest 1 million naira at a rate of 15% per annum, you would pay a discounted value of 850,410 naira 96 kobo. Now, and at maturity, receive the sum of 1 million naira. The difference is the interest earned on the investment. You can also decide to reinvest your interest, which yields a higher return at maturity. That is, the 149,589 naira for kobo will earn interest which increases your maturity value. 4. Interest on CPs is now subject to a withholding tax of 10%. Hence, it is essential to note the net return after tax before investing. 5. CPs have a maximum maturity of 270 days. 6. CPs can be purchased both in the primary and secondary market. The primary market is when you buy directly from the company issuing the CP. The secondary market is when it is subsequently traded among holders of the CPs. 7. CPs are less liquid than treasury bills. That is, it is not easy to sell in the secondary market before maturity. Hence, anyone buying CPs should plan to hold it till maturity of the investment. 8. CPs mostly have a minimum investment threshold of 5 million naira. It is important to conduct due diligence on the company issuing the CP before making an investment decision. Some of the steps to take include: 1. Ensure you buy CPs of companies that have consistently been profitable and with a business you understand. 2. Ascertain the company's credit rating and assessment of credit worthiness. For the conservative investor, we would recommend you look out for a minimum rating of A by at least 2 well-known rating agencies. 3. Ensure that the CP program is registered with the FMDQ exchange. 4. Confirm that the value of CPs issued are a tiny proportion of their total net assets or equity. 5. You can also consider receiving your funds upon maturity and reinvesting rather than automatically rolling over your investment to test the firm's credit worthiness, that is, ability to pay back. 6. You can also ascertain the governance structure of the issuer, that is, the company. This is to ascertain that the company is well structured and run by reputable persons. CPs are a form of fixed income investment that preserve your capital and are not vulnerable to any price or rate fluctuation, hence are very low risk compared to other forms of investment. There is a need to seek investments with higher return to protect the purchasing power of your savings and investment. In this regard, CPs are a creditable alternative to treasury bills. Thank you for listening. Please join us same time next week for another exciting and insightful session. For comments, questions, and feedback, kindly forward to ebo.ayodeji@gmail.com or send SMS to 070-8246-3747. Stay blessed.